And we are back with another episode of Full Disclosure with Christian Thayer. You guessed it, I am your host, Christian Thayer. So, another day, another year has gone. We are now in 2022, and what better to do at the beginning of every year than to try and I don't know if predict is the correct word, but just maybe talk about, shed some light on what the possible year might look like in the housing market. I have a couple of articles that I want to talk about. Basically, just they're going over, their thoughts because these guys are like actual analysts and economists. I am merely somebody that has a podcast. So we are going to go over some of what they say in the articles, and they're going to be breaking down, you know, maybe why it will or won't be as hot as it was in 2022. So, after breaking records for days in the market, mortgage rates, median sale prices, as well as inventory, a lot of people are thinking that the housing market will not burn quite as hot in 2022, but a lot of people are still thinking that, it could be warm, so to speak, because of a multitude of buyers still will be chasing too few of homes, according to economic experts across the real estate industry. Basically, experts are predicting that home prices will continue to rise, sure, albeit more slowly than this year's white hot rate. And by this year, they mean 2021. While mortgage interest rates increase and inventory bumps up marginally from a record low, the pandemic fueled inflation is expected to decelerate, and worker flexibility will continue to pull home buyers to more affordable areas. A mortgage expert at NerdWallet, which is a blog, website, whatever you want to call it, said that the forecast for 2022 housing market isn't looking too different from 2021. If the market is cooling down, it's only by a few degrees. There are still many more buyers than there are homes for sale, particularly in the starter home price tiers. Shocking. Sellers continue to have the upper hand, but as buyers go from wary to exasperated, in some markets, the days of bidding wars and no contingency sales may start to wane. In 2022, we'll more than likely see a more balanced market with a bit more inventory and slower price growth, but it certainly won't be a buyer's market, according to Redfin's chief economist. Why can't I say that word? Daryl Fairweather. This article is just a bunch of quotes, so I'm going to read a few of them. Home buyers should expect a quote unquote whirlwind year in 2022, and that's according to Realtor.com. What does that even mean? Americans will have a better chance to find a home in 2022, but will face a competitive seller's market as first time buyer demand outmatches the inventory recovery. Additionally, with listing prices, rent, and mortgage rates all expected to climb while incomes rise, 2022 will present a mixed bag of housing affordability challenges and opportunities. That basically just sounds like they're saying much of the same, but also we don't know. The article then goes to break down five economic indicators to keep an eye on next year, starting off with mortgage rates. I keep saying next year because that's what the article keeps saying, but next year is really this year. So I'm going to try and stop saying that. Redfin's Fairweather predicts 30-year fixed mortgage rates to rise from around 3% to around 3.6% by the end of 2022, translating into about $100 more per month in mortgage payments for the median home. The anticipated change in mortgage rates may push some sellers off the fence. With mortgage rates at historic lows, some homeowners will want to trade up to larger homes, as the Federal Reserve will be tapering mortgage backed securities due to rising inflation. Those already in the position to look into larger homes will aim to tap into lower rates while they can. Economists from Zillow and Realtor.com predict that existing home sales will hit 16-year highs in 2022. Existing home sales are predicted to total 6.35 million compared to an estimated 6.12 million. And that would be the highest number of home sales in any year since 2006, which now is what? Wait, what year are we in? 16 years ago, with more than 45 million millennials, myself included, in the prime first time home buying ages of 26 to 35. Demand for housing is expected to remain strong. A growing economy and declining unemployment also propels income growth by a 3.3%, keeping sales levels high despite climbing mortgage interest rates. In most metro markets, our model suggests that home sales will follow the national trend and increase in 2022, while some markets are expected to see home sales declines. And these declines are likely to be modest. In fact, for many areas forecasted to see declines in 22, it's expected to have the second highest sales level in the last 15 years. By contrast, NAR's expert expects a slight dip in home sales due to rising mortgage rates. The housing market performed better than it has in 15 years in 2021, with an estimated 6 million existing home sales. As mortgage rates tick up slightly, the analyst predicts existing home sales will decline to 5.9 million in 22. And if there's one factor in the housing market that is outweighing everything else, inventory may be it. 21 was arguably the best year in history for housing markets, said Pierre Debas, managing partner of leading real estate law firm. We are going into 22 with close to a shortage of 6 million homes. Active for sale inventory of single family homes typically hits bottom in the second week of January, but it didn't reach that point until April 30th of 2021. Any new inventory that was getting listed in the first quarter was getting gobbled up so quickly that inventory actually kept falling. Another analyst said it's going to be very difficult for us to have anywhere near the normal levels of inventory for 22. What that means is we can already see in the data supply is restricted for all of the year. So even if mortgage rates were to rise, inventory would only increase a little bit. No matter what happens with rates, with the rest of the market, there's very little opportunity for a lot of inventory to build. This, of course, is due to both skyrocketing demand and suboptimal levels of home building, according to experts. The market forces that have given sellers the upper hand over the past 2 years or so, tight supply after years of underbuilding, and elevated demand due to remote work, US demographics, and low mortgage rates will persist next year or 22 as well. This Zillow economist also said, expect to see bidding wars at many homes, especially as the market heats up during the spring and summer shopping season. So again, much of the same. Regarding demand, however, Bank of America notes that millennials are leading the home buying charge and that they are nowhere near done reaching the prime age for home buying. As rent prices have sped past projected estimates based on pre-pandemic trends, homeownership and steady monthly mortgage rates become more attractive. I would agree to that. However, when I moved, my rent went down. This will continue to be the case for millennial buyers in the coming years as the tailwind from the generation of home buyers is still in the early stages. The number of 35 to 44-year-olds, which historically is a leading indicator of housing starts, is set to increase by 5 million over the next 8 years. While many potential sellers are sitting on the sidelines, in part because of the buying market is so daunting, many are taking the plunge. Realtor.com expects inventory to grow 0.3% on average next year, but it still won't be enough. Redfin's Fairweather predicts new listings will hit a 10-year high in 22, but that will, quote unquote, hardly make a dent in the ongoing supply shortage. According to Census Bureau figures, housing starts jumped 11.8% in November to a seasonally adjusted annual rate of 1.68 million units. And that was the fastest pace since March. Single family units rose 11.3%. Fannie Mae is predicting that single family housing starts in 2021 will add up to 1.125 million and rise to 1.179 million in 22, which would be a 4.8% increase, but a difference of only 54,000 homes. Demand for new home construction remains robust as the supply of existing homes for sale remains historically tight, and mortgage rates continue to be highly supportive for home buyers despite drifting upwards recently. The lack of supply will inevitably lead to higher home prices, which is exactly what we saw in 21, though they won't rise as much as they did in 21, according to certain economists. After rising 17.6% in 2021, Fannie Mae predicts that the median price of an existing home will rise 11.5% in 22 to $387,000. A median home across America. Do you know how different houses are in different places of anyways? This will be in part due to rising rents, which Redfin expects will increase by 7% by the end of 22, more than double the 3% annual increase the brokerage expects for home prices. Millions of millennial renters, myself included, are on the cusp of buying their first home, but we can expect many will still be held back from ownership due to affordability. Yeah, that makes sense. Home prices will remain at record highs, requiring hefty down payments. At the same time, rising mortgage rates will make home buying more expensive. So many potential first time homebuyers will choose to keep renting. And yes, that is a true statement among my peers. Realtor.com economists similarly expect a 2.9% increase in home prices in 22. Meanwhile, a National Association of Realtors survey, or NAR, of more than 20 top U.S. economic and housing experts landed at an expected annual median home price increase of 5.7%. So, the article talks about COVID and all that fun stuff. I don't really think we need to get into that too much. It's basically this article, which I've interviewed plenty of economists and analysts and just real estate experts. Essentially, they're all on the same page of inventory is still going to be tight, prices are still going to be going up, but just not as much as last year. Now, are these guys going to be correct in terms of, maybe it's exactly like last year? Maybe the tight inventory is going to cause another frenzy and people are going to be paying way too much for houses. Well, either way, that should be good news for you as real estate agents. Yeah, I mean, if you didn't love the whole idea of if you don't, get your clients into the house within the first 16 minutes of it being listed, then yeah, that is probably a bummer in some areas. But yeah, if I had to imagine where we'll most likely be seeing much of the same, I mean, I'm probably going to be keeping my eyes open for a house this year. I'm not, looking to like, I'm not like, oh, I have to have a house this year, but I'll keep an eye on it once the spring hits. I don't necessarily have anywhere to be, so maybe that's why I am putting it on hold. But I also, I feel like everything's super expensive right now. So if I don't have to buy a house, I'm probably not going to buy a house. And that's about it for this episode. I appreciate you guys making and listening to it this far. Hopefully, more episodes will be on the way in the coming weeks and months. And as always, I will talk to you guys next episode.